Hi, I'm Lisa Leiter. Here's your Chicago Business Today midday report. AMR, the parent company of American Airlines, filing for Chapter 11 bankruptcy protection this morning. It will be business as usual for travelers during the reorganization process as the carrier looks to unload its massive debt built up by years of high jet fuel costs. Speculation about a bankruptcy has been growing in recent weeks as talks with the union stalled. AMR also announcing a change at the top. Gerard Arpey is retiring from the CEO post, which will now be held by Tom Horton, the company's president. American was the only legacy airline to avoid bankruptcy following the 9/11 terrorist attacks. The airline is looking to cut some flights and some jobs to help reduce costs, but major cuts at O'Hare Airport are unlikely, according to Morningstar analyst Basilia Lukos, as American can't afford to lose market share there.
They've been trying to focus on their cornerstone markets, and if I think about AMR more broadly, it's basically an international airline that's straddled with high costs on the domestic front. And so I still think they're going to look at O'Hare as one of those large international hubs and be able to filter traffic from their two international markets. So it's still important. That'll still help them operate as the international part of it. It's just on the domestic front where I think you'll see cuts occur.
Lukos also added that a merger with U.S. Airways, which has been talked about, would make sense for American, but that combining the pilot unions could derail a deal. Well, local home prices dipped in September after 4 straight months of gains. The Standard & Poor's Case-Shiller Index of Chicago area single-family home prices fell slightly in September. Compared to a year ago, prices were down 5%. And Chicago was in good company. Prices fell in 17 of the 20 cities tracked by S&P. A separate report today showed that nearly a quarter of local homes are worth less than the debt owed on them, and that's higher than the national figure according to CoreLogic. Well, Groupon stock price is starting to look like one of the company's daily deals. It now stands almost 40% below its debut day close. The stock is up today, but a sell-off sent the shares yesterday to close at $15.25, below the lowest end of the initial IPO price range. Yesterday's fall surprised some analysts considering the overall market rallied. But Groupon's drop is not deterring Facebook. The company is saying it is targeting the second quarter of next year for an IPO that could value the company at $100 billion. And finally, an update on the CME tax break bill. Today, the full Illinois House is expected to vote on the legislation designed to keep the exchanges and Sears Holdings from moving their headquarters out of state. It's possible that the Senate could take up a different version of the bill that would offer more aid to low-income workers. Be sure to check out Greg Hines' blog on chicagobusiness.com for updates on that story. And that's this edition of Chicago Business Today. Be sure to stick with chicagobusiness.com for all of your local business headlines. Thanks for watching. We'll see you tomorrow.